Now, listen, this is how the life insurance works. And guess what? At the end of this video, you're going to tell me whether is that a bad deal or a worst deal between those two things, all right? And by the way, guess what? At the end of this video, I dare promise you, I'm going to leave you in a situation whereby you'll be like, wow, I didn't know exactly that how happens. And by the way, I know one thing. Most of these people who shall we call them the middle incomers, they love the life insurance. By the way, probably when you're watching this video and probably you already have one, let's get to see whether you actually stand to gain the best option or rather whether you're having the best deal at the end of the day. Let's get into the business. Now, the question is this. First of all, an insurance. An insurance is sort of like an assurance whereby, guess what? Don't want to play safe or rather don't want to risk anything? Fine. We can do it for your behalf. Because by the way, you see, insurance does this. This is you, this is the insurance companies. You don't have to take risks. With your money, they tell you, okay, fine. If you don't want to take risk, then we can take risk on your behalf. So you give us your money, then we risk your money. So at the end of the day, it's like you risking your money using a different person. It's like saying, hey, you know what? I love my kid so much. I can't be able to punish my kid or beat my kid. No, so I can't be able to do that. So I'm going to give it to my grandfather or grandmother to do it for me. But the fact remains is your kid being punished. You get the thing? Now, let's get into the business now. And by the way, if you're watching me for the first time, this is Good Joseph speaking. I talk about money investment, anything related to that. I literally open your eyes and tell you, wow, this is what you've been missing. By the way, if you don't want to miss one of my good videos, make sure that you hit the like button and subscribe. Just beside my subscribers, there is a small button written subscribe. Hit that magical button. Doesn't cost you anything. Comment down below and share this video in position 2. Let's get in the business. Now, life insurance. Well, this is an idea whereby they tell you, guess what? Now, here there is a very hardworking person by the name Dan. Dan works every time and Dan love to make sure that everything as far as his life is concerned, the family, the kids, the anything and everything is safe and secure. So Dan gets approached by a company. The company tells him, guess what happens now, Dan? Guess what? Hey, Dan, hey, by the way, have you ever asked yourself, what if today you get to die? Because at the end of the day, we're going to die, all of us. How safe is your family? I mean, what exactly are you doing for the sake of your family to be safe and secure in the future? And then be like, by the way, I never thought about that. Okay, I never thought about that. What exactly can I do? Guess what, Dan? How much do you make a month, Dan? Well, I'm glad I make like 80,000 at the end of the year. Okay, Dan, guess what? We just need 10 out of that 80,000. So we can leave you with 70,000. So this 10,000 that you're giving us each and every month, you save with us. And guess what? You're not just saving, it's an investment. That's what they tell you. It's an investment. So be putting that money with us each and every month continuously. In case one day, Dan, say maybe after 30 years or 40 years, or maybe say when you hit 70 or something of sort, you die, of which we gonna do all of us. Then the company gonna pay you like 5 million, gonna pay your family 5 million. Guess what? Your family is safe and secure. And Dan be like, what? That's amazing. I just part ways with 10,000 and get my 5 million at the end of the time. Amazing. I'm going to go ahead and do exactly that. So the Dan goes ahead and subscribe to that thing. Guess what? Dan is a hardworking person, has kids, and Dan does not want to play the risk part of it. Dan just want to be like, hey, guess what? I don't want to take any risk. And remember what I told you at the beginning of this video, if you don't want to take the risk, they take risk on your behalf. Now, Dan parts ways with 10,000 each and every month for the next, say maybe they tell you there are different types of policies or there are different types of terms and conditions they tell you. They can tell you this money that we call it a life insurance can only be realized once you die. Okay? So unless you die, that's when you're going to get the money. So now guess what happens now? The banks now, or rather the company, goes ahead and takes that money. Let's calculate and see who exactly wins in this game. And I want you to approach this message with an open-minded. You have to be the smartest kid in town for you to understand what I'm about to talk about. So when these companies take the 10,000, do you think in any way, and I'm going to ask you this question and I want you to think, do you think when they take that 10,000, they just go put that money somewhere in a vault somewhere, maybe say underground or in the basement and keep it out there? They keep it for you, and then until you die, they go withdraw that money and they give it to your family? No, they don't do that because that is financially irresponsible, or maybe that's violate all the principles of finance. So what happens with that 10,000 that you give? They take that money from you, they take that money and go put in a vault. Now a different vault, a vault that actually has an interest on top of your money, whatever you give them. And obviously, they are smart. They don't risk your money. They cannot just put your money anywhere. They go put their money in something like bills or bonds, or they put in an FDS, that is fixed deposit investments or something of sort, or they can do that money to what we call the commercial paper, where they give it to big companies which are stable, and then they get in returns and something of sort. In short, what I'm trying to say is that they make money out of your money. Now, the question is this. If you take, let's say, for example, you die at 30 years, okay? After 30 years from when you subscribe your thing. And I'm going to use a very short period of time. Some of us will go over 70 years or 100 years from now. But the point is, let's just take the shortest period of time. See, say you die after 30 years, and that is when your life ended. Now, the point is, how much would you have contributed by the end of 5 years? And remember what they told you? They're going to give you like 5 million cash, clean, without okay? Now, at the end of the 5 years, obviously you could have contributed 3.6 million Kenyan shillings in that contribution. Now, the question is this: if it happens that you die after that year, that particular period of time, and they promised you 5 million, guess what happens? Have you ever heard of people actually having their person died and they're actually trying to follow up the issue of them paying and something of sort? Because you can subscribe and then maybe you die next week or next month or something of sort. They ought to pay you. Maybe in Western countries they follow these procedures, but I have cases in Kenya whereby your policy has matured, your policy is ripe to actually harvest out of it. They take you corners and corners and corners before they actually actualize that amount of money, because they are in the business. They can just imagine if they give you the 5 million after that period of time, guess what happens now? They have actually contributed 3.6 million Kenyan shillings. But guess what? They don't calculate it that way. That's what you think. You may be like, okay, see, I've contributed 3.6, then you're giving me 5 million. Wow, they have added 1.4 billion on top of that. That is what you think. But the question is this: to what extent have they used your money, 3.6 million, and they can be able to comfortably give you the 5 million? This is what happens now. So if you alternatively, you were to ignore or disregard the life insurance and say, what? I still want to insure my life, I still want to insure my life, and I want to do something for the sake of my families. Instead of that, let's say you pick something like an MMF. The same company that is giving you all this life insurance, they have a money market fund, but they don't want to sell that idea mostly. They sell the idea of the life insurance, okay? Now, you take that money into an MMF now, into an investment that is, or you can pick even a bond or a bill where they're putting that money. And guess what? If you can get an average of 13% per annum, say this is where they keep this money, they say this is where they invest this money of yours. Now, you get 13% per annum and you're contributing 10,000 monthly in a compounding interest. Guess how much that ends up to be at the period of 30 years? That is 35.5 million. I repeat, you are contributing the same amount of money that you would have contributed to a life insurance. You take that money, contribute it to an MMF, and of which MMF are quite of the stable areas, or bills, or bonds. Those are quite of the stable areas where you can keep your money. That gives you the compounding interest. Because I know you'll be like, but I don't know whether my money is safe. Even them investing those areas, that is the argument. Now, you put that money in that particular area where they're giving you only 13%, and that money has contributed to over 35.5 million Kenyan shillings, and now they're giving you the clean 5 million, and guess what happened? They have made a clean 30 million. Even if you were to say tax was about 10 million, let's say even tax is 10 million, you're remaining with 25.5 million, and then they give you the 5 million. They still have their clean 20 million. And that's how these insurance companies tend to be the wealthiest, not only in Kenya, but globally. Guess what? That is you, there is another individual, there is another individual, there is another individual. And if you calculate the rate at which you're contributing vis-a-vis the rate at which you guys are dying for them to be paid, or for you to be paid by these life insurance companies, obviously the rate at which you guys are contributing is way higher compared to the rate at which they're doing what? They're paying you back. It's like the way we have the insurance that usually, insure our cars. And of course, if you calculate the number of cars that are having accidents in a day vis-a-vis the number of cars that are subscribing to doing new insurance or doing the continuous payment, you get what I'm saying? So you have to do those mathematics. So the question is this: so instead of going the MMF, instead of going the life insurance way, how about you go invest by yourself? Because at the end of the day, you say you don't want to invest because, hey, maybe you don't know, or maybe you don't have to risk your money. At the end of the day, you are risking by virtue, because I always ask this question, and I want you to answer me on the comment section. Who insures the insurances? Who insures them? Because the insurance companies, they sell you the idea of risk-free, but them, they do not act in that aspect of, them not risking anything. That's for sure. And by the way, did you know that if you were to rely on the advices given by the bank, or do you know if the banks were to rely on the advice that they give you, they'll never survive? They will not be in business. I'll repeat my point. Do you know do you know that if banks were to rely on the ideas that they give you, they cannot be in business? That's a reality, because these companies, they tell you, play safe, don't risk your money, Don't do this. And the moment you approach somebody who has a family, the moment they trigger your emotional part of you, you see, the moment you see, the emotional receptors and the logical receptors, the emotional receptors tend to be a little bit high, especially when you have the children, when you have the family. So when they tell you something that actually relates to the family and kids and what have you, you kind of be like, wow, amazing. See, it's always good when you balance the logical part and the emotional part, and that way you can be able to make a quite of a decisive decision. So the point is this: if then you must get into an insurance, life or life insurance thing, combine the two of them. Get half of half. Okay, fine. They're telling me to give them the 10,000 at the end of the time. Fine. I want to play the saving, and at the same time, I want to do something for me. I'm going to have this money. Instead of giving them the entire 10,000, I'm going to go ahead and do what? Give them 5, and I invest 5 by myself. That's a reality. So you give them for the life insurance, 5 for the life insurance, and 5 you put it, say, in an MMF. And guess what? I made a video and I told you, if you were to contribute only 5,000 continuously in a period of 5 or 10 years, you're going to get yourself $1 million bob. Can you imagine this? What if you were to invest it in a period of 20 years? Guess what happens? I know you'll be thinking, that would be 2 million. No, you might actually get it at 4 million around that particular point. How about now you do it at the 30 years? You're going to get yourself like 7, 8, 10 or close to that amount of money at the end of the time. So guess what? You've actually not put your 5,000 at the end of the month idle. It has actually, you're entitled to get life insurance as they promised you, but obviously that will go a little bit low. And at the same time, you've actually invested your money somewhere whereby it is earning you an interest. So that is exactly how you actually do the deals, because sometimes I get tired when I see people telling me, you know what, Joseph, I'm contributing to my pension. By the way, the next video to be about pension. How about that? What's the idea and how exactly does it do, and what's the best thing can you ever do? Because I get approached by a lot of people telling me, hey, you know what, Joseph, I contribute to a pension and this is what I have. The pension is giving me, I don't know, 3 or 4% or 5%. What is the best deal that I can be able to see? It's always good to make sure before you subscribe to any given deal as far as the money is concerned, always contact your financial advisor. Make sure that you're getting the best deal in town. And by the way, at the end of the day, make sure that at least you understand where you're putting your money. And I always tell you, put your money where your mouth is, or put your mouth where your money is, but make sure at least the two meet at the end of the day. And never forget this. I'll keep on reminding you, in every deal as far as the money is concerned, there is always a fool. And if you can't see any, you're the one. There's a reality and there's a fact. Guess what? I'm not here to bash any insurance companies. They're amazing. We love them. I do love them particularly. But I love when I do the insurance of my businesses, insurance of my cars, insurance of my investments. They are good and great when they do those kind of things. But be careful when they sell an insurance policy on the basis of it being an investment. All right? It is not good to make sure that you actually ask all these nitty-gritty questions and go ahead and do so. So insurance, that's my disclaimer. Insurance companies are best. I support them. They are great. They're in business. I understand. And they are better, or they are good when they deal with the insurance of the cars, the health insurance, the businesses, the investments. They do an amazing job. I support them on that. But when it comes to some of the deals, be very careful and cautious so you don't get ripped off. That's a reality. And guess what? We are here on this channel. I'm going to try the best that I can to make sure that I keep you eyes open on the world of the finances. And I bet one day we'll reach a point whereby you say, hey, guess what? We did something, and that will be the greatest thing that I'll ever feel in my life. And by the way, guess what? I do upload a video each and every day. And if you don't want to miss any of my good videos, make sure that you hit that subscription button. Make sure that all the time you get to be notified whenever I upload a good video. If you like the video, share this video with many people as you can. Share in your WhatsApp groups, share in your Facebook account, share anywhere and everywhere and anywhere, so that at least people can get something at the end of the day. And make sure if you're in a position to, you can be able to join my community out there where you get a special perks. For now, it's a goodbye and see you. And by the way, if you'd like to have a conversation with me at a personal level, my number is always on the description of this specific video. Get that number. Let's have a discussion for just a cup of coffee's price. For now, it's a goodbye and see you in the next one.